Welcome back. You are now listening to the second part of the final accounts. Here you can see the question. I've already taken it from some other source. So you have purchases here 3000, sales 5000, purchase return 300, sales return 500, opening stock 1000, and all these are the balances extracted from ledgers. All debit balances are written on the debit column. All credit balances of ledgers are written on the credit column. The first and foremost thing you have to consider in final accounts is whenever the ledgers are given, you have to identify whether these have to be transferred to trading account or profit and loss account or to balance sheet. So as I have told you earlier, how to transfer to trading account by taking one example of purchases. Now usually opening stock is the first item. So let me see here what all goes into trading account. Purchases goes to trading, sales goes to trading, purchase returns goes to trading, sales returns also goes to trading. Opening stock is the first item on the trading account. Wages, all direct expenses are taken care in the trading account. So direct expenses and manufacturing expenses. So I have left out here coal and freight etc. which are related to manufacturing. So manufacturing expenses are treated in trading account and other indirect expenses are treated in profit and loss account. So here I have considered manufacturing expenses also going for trading account. Next, I am filling the entries in the trading account. So opening stock 1000, purchases 3000, less returns 300. Okay. Likewise, this was the fifth item. This was the first item. Now sales, the amount given is 5000, less returns 500, and you have 4500 as the balance. Then you have the other direct wages, direct expenses and manufacturing expenses all relating to trading account. Now let us see how it proceeds. So you can see the values being written there. That's it. Now what I should do is I should check the adjustments. So here you can see the adjustment closing stock 3000 and outstanding expenses. Time being I am not taking the prepaid expenses. I'm just illustrating this too. So any adjustment which is outside trial balance, when it is brought into final accounts, it has to be treated twice. The reason is whatever items you have got here all are being treated two times. One in debit column and another in credit column. That's the reason the total is matching. Now if you introduce something outside this, and if you write it only once, there will be a mismatch, okay, to that extent. As such, every adjustment which is outside trial balance has to be treated two times, okay. So closing stock has to be treated by taking it into the trading account. I will talk about it further in last section, but time being I consider closing stock. One trick is for adjustment, just make a mark like this because I have treated only once. In balance sheet again I have to treat it another time. So that's the trick. Adjustment is treated twice, once in trading account or profit and loss account, second time in balance sheet, and you may forget. So what you do is you have some symbol. Now let us proceed. So do the total of both the sides. So what is the total you are getting here? 7500. What is the total you are getting here? 4000. Now which is the bigger total? 7500 is the bigger total. Write the bigger total on both the sides. Now this side 7500 is okay, no issues, but this side the total is 4000. How can I write 7500? As such, what I do is from 7500 I reduce 4000. So how much balance I get? 3500. This 3500 is what is something like carried down. So this side, if it comes carried down in trading account, we consider as gross profit. In some instances, carried down may come this side when the total of this side is bigger than the total of this side. But here we have fortunately bigger total on the credit side. As such, we got carried down this side. When you get carried down this side, it is gross profit. So gross profit carried down. Now how the carried down go to the brought down? As I said earlier, carried down always goes to the opposite side, and from here starts your profit and loss account. So in profit and loss account, you can see first item is gross profit brought down, that is 3500. Now let us transfer each of the items related to profit and loss account. From this table you can see I have not marked. Usually in the beginning of the problem itself you can mark what all relates to profit and loss account and what all relates to balance sheet. Now few items are here which relates to profit and loss account. Those are salaries, rent, discount allowed, all are having debit balances, so I have written here debit. But one thing you can see here, discount received, okay, it is credit balance, so where it is transferred on the credit side of profit and loss account. My dear students, it's very easy. Only expenses which are there in debit, just write on the debit side of profit and loss. Income which are there, write it on the credit side. Balance sheet items don't write here, so that is assets and liabilities. So what are the assets and liabilities left out? Cash, debtors, capital, creditors, reserves, loan and bank balance. Now let us go back again to profit and loss account. Before that, expenses are treated two times, that is what I have written here. I have forgotten to take the outstanding amount value, that I will be writing later. So time being, check it out what I am doing. So you have this outstanding expenses. So outstanding expenses is also adjustment. That's the reason I have written it as symbol as to. Amount have not given. Now I will give the amount. Let us consider outstanding expenses to be rupees 500. Okay. Now here you can see I have marked this as profit and loss account. Profit and loss account. This you do it in the beginning itself. Now debtors happen to be balance sheet, cash happen to be balance sheet, capital, creditors, reserves and surplus, cash at bank, bank loan and bank balance all happen to be balance sheet items. So balance sheet items will go to balance sheet. Time being we are in profit and loss account. How to close this profit and loss account? So in the profit and loss account, what do is same thing what I did for trading account. I total both the sides. This side I am getting 3550 and the total of this side I am getting it as 1000, just a minute, 2050. Now as you know, which is the bigger total? 3550 is the bigger total, right, on both the sides. Now 2050 is less, so if you add this it is correct, but if you add this is correct, but if you add this is not correct. Something you need to add here. That's something we used to call it as carried down, but in this case if credit total is more than debit total, then here it is net profit. If debit total is more than credit, then what the balance you get here, it will be net loss. So time being most of the problems will be net profit. So here it is carried down like, but now we'll see what is the difference. The difference amount is 3550 minus 2050, that comes to 1500. So this 1500 is nothing but credit balance. Actually here it would have been CD. Now if you have brought it down, it would have become brought down and that would have been credit balance. Now one thing about balance sheet, all credit balances are written on the liability side, all debit balances are written on the asset side. Okay, this is a very important point with respect to balance sheet. As such, net profit, if it was brought down here, it would have been credit balance. That's the reason net profit has to be shifted on the liability side. We'll see how to fill the balance sheet. So balance sheet, you have debtors, you have cash. Why did I write debtors here? Because it's debit balance. Cash also debit balance, so I have written it on the asset side. If you don't know, no issues. Just if it is debit balance, shift it on assets. If it is credit balance, shift it on liability. It's same as ledger. In ledger you have debit and credit, but here in balance sheet you have on the debit side credit balances, on the credit side debit balances. It's an opposite issue. Okay, just make it a point like that. That was a shortcut what you can remember. In balance sheet, opposite things, that is in debit side credit balances, in credit side debit balances. So from the trading trail balance sheet items have to be blindly shifted to debit balances to asset side, credit balances to liability side. Capital is credit balance and this net profit also is a sort of credit balance. As such, it will be shifted to balance sheet liability side. Next, creditors, I have not given any amount here. That's the reason I have not written here. If it was there, I would have written the same amount. Now you can check it out. I have written almost all the items. Reserves, I don't know what it is, but still I know it is credit balance. What was the trick? If it is credit balance, just write it here. Okay, so loan, assume I didn't know what it is. It is a liability, so I just didn't know how to do or what to do about it. Use the trick. It is credit balance, so I'll write it on the liability side. Now only one thing is left. What is that? Adjustment. Every adjustment is to be treated how many times? 2 times. So how many adjustments are there? So that the special symbol will help you out to sort out that. There is one special symbol here, another special symbol here. So 500 need to be written, 3000 need to be written. Where I should write? So for that I will give you a shortcut at the end of this topic. So let us follow where I should write time being. Closing stock on the asset side, outstanding expenses on the liability side. Now if you total both the sides, it's coming the same total, 13,500. 13,500, I have erased it, no issues, 13,500. Now I'll talk something shortcut about the other adjustments. Prepaid expenses, another such adjustment. In adjustment, you just remember you have to understand table. So 2 times you have to treat. One time in trading account or profit and loss, second time in balance sheet, only to maintain the double entry concept. I'll just give you the shortcuts about adjustments. Just have a view of it. So prepaid expenses. What you should do for prepaid expenses? You have to reduce it from the concerned expense. That is, in the profit and loss account on the debit side, deduct it from the concerned expense. Okay, for example, rent, prepaid rent, you reduce it from the actual rent. That amount you can write it here. Just like sales less returns, here to rent less prepaid rent, whatever the final amount is there, you write it once, and don't forget to put this symbol with some number. Okay, next, where does prepaid expense be treated second time? It will be treated second time in the balance sheet. Where? Asset side. Okay, so that was prepaid expenses. Similarly, outstanding expenses shortcut is, what you have to remember is, outstanding expenses add to the concerned expense in either trading account or profit and loss account. Sometimes wages outstanding may be given, then you have to add here. Sometimes discount allowed, no. Rent or salary outstanding may be given, usually salary will come. Outstanding salary, you can add it to the already existing salary. So one time on the debit side to be added, second time definitely on the liability side it will be written. Okay, so liability side on the balance sheet liability side. So thanks for listening. I am hoping to give another talk on operating system memory management if time permits. Till then, goodbye. Thank you for your support. I have been helpful to you and I need your prayers. Thanks a lot. We'll meet later.